with the paper market having no ability to slow it down or reverse it, you can start taking some guesses at what it could be. There's a whole bunch of things from a canary in a coal mine of what's happening in different bond markets around the world outside the U.S. What's happening with government shutdowns and the stock market behaving as it continues as if nothing can ever harm it, including really a 21st century pyramid game now where these semiconductor companies are investing in each other and somehow passing the money around makes them all good. So there's a whole bunch of things, but I sit here as someone that I don't know if you could have been more adamant bullish on gold these last few years. I mean, in the end of 2021, I sold all my stocks and bonds just to own physical gold. And yet I still sit at amazement that as you and I speak, we're just, a hair away from 4,000 and one more little push at $50 silver. Well, it's just a matter that if gold wasn't for what a lot of people own gold because they're concerned they want to have an alternative to paper currencies. They're concerned about economic and social issues and all. If you have those concerns have only grown worse. So there's no reason to remove your insurance policy now, that, especially if you bought it lower. But there's people that bought gold, I've had them, that bought it simply because, hey, I thought it could be better than stocks and bonds. If that's the case, then you should use some sort of scale-up program. As it goes higher, you should liquidate. Listen, I'll say this again. To get much above $5,000 in the next 12 to 24 months, even though we're already approaching 4, things, if we think are bad now, are going to have to be a lot worse. Now, part of this also is we've seen just tremendous physical purchasing out of the Far East, particularly in China. The difference between us Americans and our Chinese counterparts, they spend weekends in the mall taking hard-earned dollars that they made and buying physical gold for ownership. Here in the U.S., where 2/3 of the people are working paycheck to paycheck, they're borrowing money to go buy things a lot of them don't need that they can't afford to pay for on weekends at the mall. Now, I think the Chinese are going to come out a lot better off than those folks. And so there's changes afoot. I also think, and I go back to an old standby, I think, since you and I started talking, and all this talk early in the year, the death of the BRICS, and Trump is going to break their kneecaps and they're never going to stand. Here's a little secret, ask people. How many trade deals have actually been done? How many are done, signed, and enacted the way Trump said? You don't even need one hand to count them. That's another reason why gold is being bought, because people outside the United States recognize that the de-dollarization is real. The less concerns about wanting to be involved in the U.S. and its money is occurring. And there's groups outside, especially in the Far East, that are willing to look at trading among themselves without the U.S. participation and in an alternative to paper currencies, particularly the dollar.
Not everyone buys gold for the same reason. Some see it as a defensive asset, others as a profit opportunity. If you entered during lower price ranges purely to outperform stocks or bonds, a scaling strategy, selling portions during rallies can lock in gains. However, analysts warn that for gold to surpass $5,000 in the next 12 to 24 months, global conditions would have to deteriorate even more severely. Rising inflation, debt crises, or a major financial shock could be catalysts. Investors must differentiate between hedging for protection and speculating for profit, and act with strategy, not emotion.
Yeah, I just actually put out a report about it. It's an amazing number, even for somebody that was banging the drums as hard as he could between 1,300 and 2,000, thinking that if we got to 4,000, it was 3 to 5 years at least before we'd get there. And here we are. There's something transpiring to see this dramatic move and strong physical buy-in with the paper market having no ability to slow it down or reverse it. You can start taking some guesses at what it could be. There's a whole bunch of things from a canary in a coal mine of what's happening in different bond markets around the world outside the U.S. What's happening with government shutdowns and the stock market behaving as it continues, as if nothing can ever harm it, including really a 21st century pyramid game now where these semiconductor companies are investing in each other and somehow passing the money around makes them all good. So there's a whole bunch of things, but I sit here as someone that I don't know if you could have been more adamant bullish on gold these last few years. I mean, in the end of 2021, I sold all my stocks and bonds just to own physical gold. And yet I still sit in amazement that as you and I speak, we're just, a hair away from 4,000 and one more little push at $50 silver.
One of the most striking dynamics in the gold market is the cultural divide. Across Asia, particularly in China, families spend weekends buying physical gold, viewing it as a tangible store of wealth. Meanwhile, in the U.S., many live paycheck to paycheck, often borrowing to finance consumption. This contrast is shaping the global gold landscape. Chinese demand has surged with record imports and central bank purchases reported in 2025. As Western consumers chase credit-driven lifestyles, Eastern buyers are quietly accumulating enduring wealth, positioning themselves more resiliently for the next financial upheaval.
We've done that without, certainly here in the U.S., I can only speak to Elijah, in that we've not done that with typical investor participation. Still, I have a separate planning group, and still to this day, we see 5 to 15 new prospects a week, and not 2% of them have 1% gold in it. So it's not like this has become, the reason it's going up is because so many people are getting involved in it, like you see in technology or stocks. You could then beg the question is, what if they do start getting involved in it? What's the number? And that's what you're going to have to believe in for much higher prices over time. But for now, it's still a great accomplishment and a good thing. And there's 2 separate holders of gold right now. And I've been both, and I have both. Listen, if you own gold because you're concerned of a whole bunch of social, economical, and political, don't even think about selling it. Be glad that you bought it a lot lower because you got insurance for a lot cheaper price. If you don't own any and you're concerned about the social, political, and economic, what's stopping you from owning it? But if you bought it between $1,300 and $2,000 because, hey, I just thought I could make money in it, when you got doublings, you got to start thinking about taking something off the table. So no 2 people are like, I'm not a big believer, although I finally did put out these so-called model portfolios. I never liked them because no 2 people are alike. Many times spouses aren't even alike. But I do think overall, those of us like yourself and your company who've been adamant about ownership of gold, listen, I put out some numbers today. Just since 2021, the end of 2021, when I said getting gold is up 4 times what the Dow has done. And it's up 4 times since the millennium began. Now, what I beg the question is, to the 99% of people that don't own gold, ask your financial advisor, how come we don't own the number 1 investment for the last 25 years? That's the question that I think goes unanswered, that should be answered.
A subtle but powerful transformation is underway. The world is slowly reducing reliance on the U.S. dollar. BRICS nations and other emerging economies are striking trade deals that bypass the greenback, opting for local currencies, gold, or new settlement systems. While political rhetoric often dismisses these developments, the data tells another story. Trade volumes outside the dollar are steadily increasing. For many nations, holding gold isn't just about wealth, it's strategic sovereignty. As global trade diversifies, demand for gold as a neutral settlement asset intensifies, reinforcing its status in a fragmenting financial order.
That conventional financial plan, I don't believe in, and we believe traditional financial planning doesn't work. And look at all, we had the 2 greatest bull markets ever in stocks and bonds, and most people still can't retire. So that traditional stuff, but 20%, now, I'd be glad with 2% going in. We can't imagine what the price would be if suddenly people looked at it that way. Let's not forget that right now, it's still kryptonite to most financial advisors. And what they have people in is still getting people's attentions. The technology, the cryptocurrencies and all. Can you imagine if those things just stop going up? Forget about going down. Just stop going up. So the people who want to believe in much higher gold prices, that's going to come from money moving out of financial assets for real. And can that happen? Yes. I will say this much. I think once we get the prints of 4,000 gold and $50 silver, and I don't mean 2 seconds after, maybe days or a few weeks, that's probably going to be a period where we're going to get a pause or some corrective action, because the markets are very, very overbought, particularly in gold itself. But for somebody that's looking into 2026 and all, and I'm going to go back and I'm singing to the choir, it's your business, it's not mine. We don't have any, I don't get anything from sales or anything. But I will tell you this, you need to have gold and silver as an insurance policy. It's been that way for years. You had a chance to buy it cheap. It's not cheap anymore. But given everything that's happening in the world, and as I still see these portfolios that come into our office that are 100% financial assets, it's a must. And the very fact that a Morgan Stanley, who literally lives off the sale of financial assets, is willing to suggest openly 20% interest in gold, that tells you changes are afoot in the financial service industry. And you'll know when it's time for you to get out of the business when you start seeing them having ads to buy gold. Then, and only then, will we probably reach the ultimate peak.
Remarkably, gold's rally to near $4,000 has happened without significant participation from mainstream Western investors. Most portfolios still hold less than 1% in gold, even as it outperformed the Dow fourfold since 2021. This isn't a speculative frenzy. It's a quiet, powerful move driven by institutional buying, central banks, and Eastern households. Imagine the price impact if mainstream Western investors eventually join in. Analysts believe that broader adoption, triggered by declining confidence in tech, crypto, or equities, could fuel the next explosive leg upward. For now, gold's strength is built on solid, under-the-radar accumulation.
This move in the physical market is strictly basically coming out of Asia. It really is. It's dramatic. Central banks continue, the Chinese, that, et cetera, and all. That sooner or later, and it will probably come after we hit that number, and the general financial media spends more than 30 seconds talking about gold at 4,000 and silver at $50. We'll have a corrective consolidation phase. And then probably in 2026, 6 months from now, you'll be speaking about, wow, Pete, we're really seeing people show up now, particularly since the stock market's peaked and everybody's not running to crypto and AI. And that'll be the combination. That's what, if you want to look for much higher gold and silver prices, that's the formation and the kind of change you're going to need to get much higher prices. But don't lose sight of how well this metal has performed without these people participating. And you don't want to crash. So everybody thinks, oh, wow, crash. And no, if we lose 20 or 30% overnight in a matter of days, we won't get that transfer of wealth transfer out of those markets as you want it to roll over. Kind of peak, go sideways, decline a little, but we don't want to crash. A crash will benefit nobody. It may make you feel good for a moment, but it'll kill the rollover effect that otherwise would occur. So outside of a crash, gold and silver should work higher.
As global markets approach a potential inflection point, gold's role is expanding. A gradual rollover in U.S. equities, not a crash, could be the ideal scenario, redirecting capital steadily into hard assets. Central banks continue to buy aggressively, particularly in Asia, underscoring their lack of faith in fiat systems. If gold reaches $4,000 and silver hits $50, a consolidation period may follow before the next surge. By 2026, with financial assets under pressure and mainstream investors reevaluating portfolios, gold could enter a transformative phase. It's not just a metal anymore. It's a mirror reflecting shifting global power.
It's not so much that it's even margin calls at this point. It's just that when a market crashes, people sell everything first and ask questions later. Even if they don't have a margin call, they go, oh, well, gold's going to go down because there's a stock market crash. I better get out. And it becomes a self-fulfilling prophecy. So outside of a crash, that's the only asterisk that I would put. And then no one knows if and when those things are going to happen. I will tell you this much. For the first time in years, I've actually implemented bearish bets on the U.S. stock market. In the last week, I've taken in, and as you and I taped this morning, I actually looked at the NASDAQ and decided to take bearish positions. So while I think a stock market can go down, as much as I have those positions, overall, the rest will be hurt if there's a crash. So I think the best of all worlds is a peaking and a rollover than a sharp decline in the general equity market. And remember, it's hitting highs, but not dramatically new highs. You know, it was up 7% 3 or 4 months ago. Now it's up 9 or 10. That's not a market that's now. A few of those stocks have gone insanely high in that regard. But I would just tell you this, as great as the U.S. stock market appears to be doing, markets outside the U.S., where I focused on at the beginning of the year, are greatly outpacing the U.S. And that's one of the other things that I believe it or not has been buoyant to the gold market. China, which many people predicted to death 12 or 18 months ago, they were going to collapse. I was in the opposite camp. In fact, I was called anti-American by a couple of people because I was so supportive of their markets. And the fact that they have turned around and have withheld the pressure from this, this big stick that Trump brought into these trade wars, China is getting its act together again. And by its stock market remaining strong, it's allowed the people to get into the physical gold market in a more powerful way.